If you guys have been watching the videos, we have been tracking stablecoins and tokenization closely. And the reason why is because these two are really directly correlated with one another. Stablecoins enable almost everything around crypto. Think of them as pretty much the lifeline for everything, right? Because stablecoins are liquidity for this market. You utilize stablecoins to transact with, to tap into DeFi protocols for like liquidity pools, lending and borrowing, you name it. And stablecoins kind of enable all of that. Now with tokenization, right? Tokenization, we're not just going to have these assets on chain. Like for an example, stocks are a big piece of all of this. If we actually look at the stock market right now within tokenized stocks, it's about $530 million. It's not like a massive amount, but it's a great example to actually utilize because with stocks, what do we do with stocks in the real world? We, invest into them, we buy and sell them or trade them. There's day traders, things like that. That's exactly the same thing here, except in order to do so, you need stablecoins. So they're not just going to sit on these networks. So, we have about 25 and almost $500 million tied to tokenization. That money is not just going to sit here doing nothing and collecting dust. No, it's going to sit on these networks. It's going to be transacted with. It's going to be, bought, sold, traded, swapped, whatever. And then we also have the DeFi side where we could actually borrow against these tokenized assets. For an example, we tokenize real estate. All right, well, now we could borrow against that, or we can lend out portions of it. There's so many huge use cases that get unlocked by just bringing things on chain, and so many different markets as well that could be born because of this. Now, I bring all of this up because we are starting to see the market for both of these really open up in a big way. With stablecoins, we already know about the stablecoin market and predictions from some of these big players like JP Morgan telling us that the stablecoin market is going to boom in a big way. In fact, $500 billion by 2028, far below bullish forecasts. Now, yeah, it is below a lot of bullish forecasts, but $500 billion is still very significant compared to where we are at right now, which is almost, half. In terms of 2028 and where stablecoins actually go, I think that this number is extremely low. Citi actually put out a great post regarding this forecast, and it was on May 12th. They said that the stablecoin market could hit 3.7 trillion by 2030. And I think that they're actually pretty accurate with this. I think JP Morgan, maybe they're being very conservative here, or they don't understand exactly what's happening here, because with stablecoins currently, we're at about 250 billion here. I think that the actual number on CoinMarketCap is like over 263 billion or something like that. But with stablecoin legislation, it's going to open up a tsunami of money to flow into stablecoins. It's actually going to open up the stablecoin market in a big way. And if we're thinking about that, we also have the tokenization boom through 2033 as well, which if we look at this, it's 18.9 trillion. Okay, it's 13.4 trillion by 2031. And we could see the steps. We could even see the steps really starting in 2029. 4.6, the next year we go to 9.4. The next year from that, we go 13.4. After that, it's 16.5 and then 18.9. Okay, if we're thinking about this, current value of tokenized RWAs on chain is 25.5 billion. And we can see the difference here from roughly, January 1st, 2024, which was about like 8.6 billion, to January of 2025, which was about 16 billion. So we just doubled a little bit. But it's not that big of a change. We're not talking a change from like 4.6 trillion to 9.4 trillion. That's almost a difference of $5 trillion in one single year. This is exactly what happens when we see major adoption of tokenization or even stablecoins. The growth just goes crazy. Now, when we're thinking about this, we're also thinking about RLUSD. RLUSD has been taking major steps to the upside. We just recently hit 500 and almost 30 million in total supply. In December, we were at 0. So in 7 months, we added over 530 million RLUSD to the market. Now, we've talked about RLUSD and the use cases that it actually unlocks. Obviously, tokenization is a big part of this, right? We have hold, buy, and trade tokenized USD on chain with the stablecoin that's held to higher standards and no reservations about our reserves. This is all based around XRP and even Ethereum. And it unlocks use cases like payment service providers. They could tap into new markets. We also have remittance and money transfers, enable seamless and near instant cross-border settlement with easy stablecoins. Then we also have centralized exchanges as well, drive trading volume growth with a trusted, transparent stablecoin partner. But there's also so many other use cases behind this as well. We really kind of look at like the FX markets, the derivatives markets. We look at peer-to-peer, or even business payouts. All of these types of use cases are now enabled because of RLUSD, and the market for RLUSD just continues to expand as well. Now, when we think about this, okay, the XRP ledger seems to be a piece behind this in a big way. But everyone will say, well, most of RLUSD is on Ethereum. I've talked about it many times over, right? Ethereum at scale just doesn't work. So we will see the XRP ledger RLUSD demand grow in a big way over the coming months and even years. But David Schwartz actually told us exactly why RLUSD is so bullish, especially for XRP and the XRPL. Check this out.
The launch of Ripple stablecoin benefits the broader XRP ledger ecosystem, driving more use cases and opportunities for developers. While XRP is the native currency on the ledger, it was built to support any type of asset, crypto or fiat, issued to trade on the DEX. Bringing more credible assets on the DEX, like RLUSD, drives direct and indirect benefits. For example, it drives more trading volume, which natively uses XRP as a bridge asset through auto-bridging and generally benefits users, developers, and apps. A unique feature of the XRPL DEX is that auto-bridging utilizes XRP as the native currency to facilitate trades between any two assets on the ledger. It automatically considers XRP as an intermediary to find the most efficient trading route across assets. RLUSD and XRP will complement each other because of the inherent differences of the cryptocurrencies. The Ripple's proprietary payment products, XRP will continue to be used as a bridge currency. Given the XRPL's speed, cost, and scalability, we see RLUSD being able to foster the growth of new on-chain applications like real-world asset tokenization, foreign exchange markets, and trade settlement. We're entering a growing market expected to see significant expansion, especially with stablecoins. Builders will certainly take advantage of the new opportunities presented by this ecosystem.
And yeah, this is exactly what stablecoins really open up. They open up a world of major development, innovation, ecosystem growth, and even more use cases to be enabled on the networks as well, which all of this leads to increased demand, increased adoption, which also increases the demand of the gas token, XRP. But also the market itself is starting to open up in a big way for stablecoins, enabling trillions of dollars to actually flow through them. For example, Hester Peirce, the SEC commissioner, put out a great post regarding the Genius Act got signed into law today. And I look forward to working with SEC regulated entities to integrate payment stablecoins safely into our capital markets. This is clear confirmation that we are going to see stablecoins integrated within the US financial system. So we will see RLUSD and even XRP adopt it within the US system. Also, on top of this, we also have from Brian Armstrong, Coinbase's CEO and founder, crypto stablecoins will be adopted by every Fortune 500 company. We also have here the video clip to go along with this. Check it out.
We're going to see the Fortune 500 really start to adopt stablecoins. We've started to see this a little bit already, even with the news that this was, going to pass in the near future. Coinbase just launched an integration with Shopify, for instance, and we've seen announcements from Walmart and Amazon, and almost every Fortune 500 company is now coming in and starting to look at stablecoin payments. And so this is a big opportunity for us. It's a TAM expansion for our business, and we think that we can provide these wallets and payment APIs for really, the whole financial system and every company eventually.
Yeah, and is it?
We're going to see.
And yeah, I mean, listen, this makes a lot of sense. Why will these companies be adopting stablecoins? Well, think about the revenue generation, right? They don't have to account for all of those fees with cross-border payments. Failed transactions become a thing of the past. You also have yield generation opportunities that they could tap into, institutional DeFi or enterprise-grade DeFi use cases. I mean, stablecoins are truly an enabler of so much. They are extremely efficient compared to traditional payment processes. And this is where we start to really see major adoption of the underlying networks in which these stablecoins actually live on. But we also hear from some very prominent names about how big stablecoins actually will be. For an example, we have over here, big shout out to Subjective Views for this, U.S. Treasury Deputy Secretary Michael Falconer discusses the growth potential of the stablecoin market, its impact on treasury demand, and whether stablecoins pose a financial stability risk. Check this out.
How big are you anticipating the stablecoin market will get, and how does that translate to treasury demand?
Yeah, thanks again for having me. It's an enormous victory today, and it really sets the stage for us to demonstrate our leadership when it comes to financial innovation. Because what this bill does is it says if we modernize the payment system globally, we now have a digital asset that has rules of the road established by Congress for what backs those digital assets. It provides enormous amounts of confidence to not only Americans, but our trading partners around the world who are then willing to make exchanges to invoice in dollars and then be paid via stablecoins because they know that it is an asset that has value behind it. Because what is it that backs it? Primarily, it's going to be T-bills. And so if indeed it's the case that this expands even further the portion of international trade that is invoiced in dollars and then allows for nearly immediate payment. So, think about it right now. When a lot of these payments are made, if you wire money abroad, it can be 24, 48 hours between when that's initiated versus when the money is received. If it's done on a blockchain, on a distributed ledger blockchain, it could be minutes, if not seconds. And so it's going to enormously hasten the time frame for making payments. It's more secure. It's more private. It's significantly cheaper. And so if indeed this does revolutionize the way that international payments are invoiced and paid, then there should be a flocking to this technology. And if all of that trade, therefore, is even further denominated in stablecoins, then there's going to be demand for the underlying assets, which are treasury securities. And we could potentially see on the order of trillions of additional demand.
So if there is this trillions in additional demand and you have stablecoins backed by treasuries and there's a mass redemption event, doesn't this create some sort of financial stability risk?
I would say the exact opposite, because, you look at treasuries, as treasury bills in particular, as being the most liquid market, the most liquid asset in the world. And so, even when we've had times of stress, we know how to make sure that the treasury market operates. So that's one thing. The second thing is, because of this legislation providing the full understanding of how these things work, providing legislative structure to them, if anything, it should reduce any kind of run risk against this asset. So we actually think that this creates a more stable environment for payments and should mitigate any concern about there being a run on the dollar or on treasuries.
And again, this reinforces the idea that we will see the US adopt RLUSD and even XRP. And you might be saying, well, what about Circle? Yeah, they could adopt any of these US dollar-backed stablecoins. The reason why I think RLUSD is a prime candidate for this is because look at the advisory board, right? We have a stacked advisory board behind this. We actually have the former chair of the FDIC and founding chair of the Systemic Risk Council on the, advisory board. We also have the former governor of the Reserve Bank of India, the former first vice president and chief operating officer at the Federal Reserve Bank of Boston as well. I mean, guys, these are not just your typical names. And on top of that, the transparency of RLUSD and the fact that if we scroll all the way down here to why RLUSD, we can see the focus here, which is they are working with regulators and policymakers to make sure that RLUSD is extremely compliant, extremely regulated. And you could read this in the documents. Even when it comes to RLUSD itself, it just got ranked #1 and an A+ rating behind, all of these other stablecoins in this market. RLUSD is at the top of the list. I do think that also with, Ripple becoming a potential bank and also, potentially having reserves held at the Fed should tell you exactly what is going to happen if we see that green light. this is going to cause so much growth demand behind RLUSD, which will also lead into even the XRP ledger and XRP also seeing that increased growth. But now is the time that you want to focus on the stablecoin boom and even the tokenization boom, which both are actually happening on the XRP ledger as well. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.